What if I told you that you don't need to be rich to start investing? In fact, many wealthy people didn't become rich because they earned huge salaries. They became rich because they invested their money and let it grow over time. If you're a complete beginner and have no idea where to start, this video will explain investing in the simplest way possible. Let's get started. Most people work for money. Investors make their money work for them. Imagine you save $100. If you leave it in cash, it stays $100. But if you invest it wisely, it can grow into much more over time. That's the power of investing. Investing simply means putting your money into assets that have the potential to increase in value. What is investing? Think of investing like planting a tree. You plant a small seed today, water it regularly, and over time it grows into something much bigger. The same happens with money. When you invest, you're giving your money a chance to grow through things like stocks, index funds, bonds, or real estate. The key word here is time. The longer your money stays invested, the more it can grow. How the stock market works. One of the most popular ways to invest is through the stock market. A stock represents a small ownership in a company. When you buy a stock, you become a tiny owner of that business. For example, if a company grows and becomes more valuable, the value of your investment can also increase. If the company performs poorly, your investment may lose value. This is why investing always comes with some risk. But historically, the stock market has grown significantly over the long term. Index funds versus individual stocks. Many beginners think they need to find the next big company to become wealthy, but that's not always the smartest approach. Instead, many experienced investors prefer index funds. An index fund is a collection of many companies bundled together. Rather than betting on one company, you're investing in dozens or even hundreds of companies at once. This reduces risk and makes investing much simpler. That's why index funds are often recommended for beginners, the power of compounding. Now let's talk about the secret weapon of investing, compound growth. Imagine you invest $100. If it grows, you earn money. Then that growth starts earning money too. Over time, your money grows faster and faster. It's like a snowball rolling downhill. It starts small, but eventually becomes massive. This is why starting early is more important than investing large amounts later. Common beginner mistakes. Many new investors make the same mistakes. First, they try to get rich quickly. Investing is not gambling. Real wealth is usually built slowly over years. Second, they panic when prices fall. Market ups and downs are normal. Successful investors stay focused on the long term. Third, they wait for the perfect time to start. The truth is that nobody can consistently predict the market. Starting early often matters more than perfect timing. Simple beginner strategy. If you're just starting out, keep it simple. Step 1. Build an emergency fund. Step 2. Invest money you won't need immediately. Step 3. Focus on long-term investing. Step 4. Invest consistently, even if it's a small amount. Remember, investing isn't about getting rich overnight. It's about building wealth little by little. The biggest mistake isn't making a bad investment. The biggest mistake is never starting. Every successful investor was once a beginner. The sooner you start learning and investing wisely, the more time your money has to grow. If you found this video helpful, don't forget to like, subscribe, and turn on notifications for more finance and wealth-building content. Thanks for watching, and I'll see you in the next video.